Go.
Hey, welcome back, everybody. Here we are with the Crypto Dark Pod. I am your host, Pudding, and we have Alex over here. How you doing, Alex?
Oh man, really good. God, I'm excited about our episode today. Let's get into it.
Yeah, so we have a special guest. His name is Bongos, and obviously this is not his real name, but for the sake of his anonymity, he is going by Bongos today. And Bongos works in a proprietary trading firm, and it's a firm that's been around for the last 20 years. And about 5 years ago, they decided to go entirely crypto. And they work with high volatility trades and high volume trades. And Bongos here is a click trader. He's a manual click trader, and he is part of their team. And he is going to be giving us an insider look, so we can pull that curtain back, take a peek behind, and see what some of these professional trading companies are doing. See if we can pull out some of the things that maybe all of us should know and aren't quite aware of. So we want to welcome our guest Bongos. Bongos, how you doing?
Yeah, good. Thanks, man. Thanks for having me. It's good to be here.
Yeah,
Nice, yeah.
welcome, man. Thanks for joining. Yeah, it's awesome. Thanks, man.
Yeah, no worries. My pleasure.
And so why don't you just start with giving us a little bit about who you are and what your job with this company is?
Yeah, so like you said, I've been working there for a little over a year. Yeah, we deal with, or what I deal with, is manual clip trading, high frequency, high volume. So, we'd have like days where I'm putting in more than 2,000 trades a day. Um, we go for like mainly scalping on that shorter time frame. Sometimes very, very large numbers. Yeah, I think personally, I'm trading. Well, sometimes we can hit 10x. We're sort of trained to use a lot of leverage in the right times. I've seen guys slamming in $2.5 million trades on Bitcoin and Ethereum, and getting out 6 seconds later for a $20,000-$30,000 profit. That sort of thing.
Wow. Mhm.
Yeah, so it was a lot of that. I think on my third night, I saw one of the senior guys doing that. Blew my mind really.
Isn't that crazy? Like that, in 6 seconds you can earn 30,000, and here's the rest of us. So would we, definitely not in 6 or even 60 seconds. But
I
yeah,
think
sorry, man.
I
Yeah, it's
think that was
crazy.
over a 45-minute period. It was an FOMC or a CPI. That was like sort of like our big events that we'd be up at 3, 4 a.m. in the morning trading that. Everyone in the office there. I think in about 45 minutes he walked away with over $120,000, which he was pretty
Wow,
happy with, of course.
wow.
But I think that's a standard sort of big event for him. But yeah, it's just that was very early days, and that blew my mind. Just that capability, what some people can earn in that time frame when you know what you're doing and what to look for. Of course, there's a lot of planning. Like he had, he'd been planning that for hours and how he's going to hit it, on what numbers and what to expect, and there was a lot of work put into it. But yeah, to see those results blew my mind early on for sure.
Oh my God! I mean, I have so many. I don't know about you, Pudding, but I have so many questions already. But I mean,
Yeah.
can we take a step back? Like, how did you get into this world, bongos? Is this something that it's easy to get into for the everyday person,
Yeah,
or
we
what?
chatted a little bit about this, and I found that part of the story kind of like just the getting of the job, what it
Yeah.
was, and then the process of that beginning, and the some of the things that for me were like holding it over your head. Like, but yeah, go ahead. Yeah,
Oh yeah,
share.
I'd love to know about that. Yeah, yeah.
I mean, for sure. I think getting the job was the easy part. That's for sure. Keeping the job was the hard part. I think in my first 6 months in the office, there was probably over, I think, 60 or 70 people hired. And by the end of the 6 months, there was three of us left. So the cut rate of people who don't make it, either because we don't get paid until we sort of start making big money, and our account size at the beginning is very small, so it takes a while. And a lot of people just can't afford to, be putting in 10, 12 hours a day, 6 days a week, and be making no money.
Hmm.
So that's a high dropout rate. And then also, once you've been there for a few months, if you're not really showing progress, you get cut pretty ruthlessly.
So,
So
so,
what sort
so
of yeah? Go
6 months, man.
Yeah.
6 months,
ahead.
no pay. Like, I mean, like,
What?
how is that even how do they justify that as a
Yeah,
company?
yeah, yeah.
Not very well, to be honest. Like they do warn you about it, they tell you all about it, so you know what you're getting into. The reality of it does shock you quite a bit after 3 or 4 months no pay, and you're struggling, and yeah, it sort of takes a while to adjust. But yeah, it's like as I said, they tell you we know about it, so we know what to expect. But as I said, a lot of people don't make it purely from that fact. I mean, after a few months, if your account balance is over $15,000, $20,000, they let you take out a few $1,000s here and there if you need it. But essentially, we're not allowed to take out any money until we earn, I think it's well over $100,000, and then that's when we can take our profit share and we sort of finish our basic training, and we're actually a senior trader after that. Um, it's not easy.
So give folks just listening who are wondering, like, the scale of this, like, maybe give some people listening some insight into like the size of the company you work for on a global scale, so yeah, what's yeah, because people might be thinking, is this just some local thing or like what's going on? Like, yeah, how big is this company
We
or
got
how influential? Yeah.
We've got over 300 employees worldwide, I believe, and a few offices all around the world on different continents. So they're quite big. They've been around, like Puddin said, for over 20 years, I think, is when it started. Two guys started it. And they've just grown, I think, rapidly. And then when they got into crypto side of things, I think that could have been, I'm not too sure how big they were before that, 5 to 6 years ago, but they've definitely, they're not stopping. They're growing. Like I said, we hired 60 people in a 3 or 4 month period. They're not slowing down.
Well, they kind of
Well,
hired them. They didn't
yeah,
have to pay them,
exactly.
but
It's I don't know if you call it hiring, but yeah,
Yeah.
we're growing. I'm pretty sure I want to get to the Asian office next year at some point to see, because they're the most profitable ones. But and I'd love to see how one of the other offices work. But yeah, they're growing all the time. The main people we do hire, at least this is the case in Australia, was this is interesting. The two kinds of people they look for: uh, poker
Mm.
players, or people with a previous poker experience who have played either professionally or play a lot in their time, and professional gamers. So one of the guys I worked with was number 3 in Australia for CS:GO at the beginning,
When you
and
say professional gamers, you mean like what the PlayStation and Xbox
yeah,
game?
yeah, man, that's it. Because
Well, why is
especially
that? For people, I have no idea why that would be relevant. Maybe some of the audience do as well. What tell us? We'll draw that link. Why is professional shoot 'em up gamers? Why is that a? Yeah, I don't. Yeah.
the reaction time. So, like I said, we're in trades for sometimes
Wow.
6 seconds, 10 seconds, 30 seconds, a few minutes max. And having that reaction time to know when to get in and get out by seeing certain things. We don't really trade off a chart. We use order
What?
flow.
What?
I think
Oh my God.
one of the top players for CS:GO in the world, were in Australia. I think he was world ranked. I know he was definitely top in Australia. He made, what did he make? $400,000 US in the lunar collapse in May last year. In about a 2 week period, just from staying up, probably 16 hours a day, sleeping under his desk, and just trading that collapse. I think he went from about $12,000 to over $400,000 in a 2 week period, just by
So, phew,
yeah, that high
who-
frequency trading and getting in and out. And because that collapse was crazy, Luna was pumping from cents, 0.00 cents, up doing a 10x in 10 minutes, 5 minutes, whatever, and then dumping again, and all sorts of volatility. And the volume was there where you could slam in $100,000, $200,000 per trade, and you're not going to make a dent in the books. So you can put that sort of volume in there, and you're not causing the splash. You can really ride the wave and not really worry about making too much of a splash. So that was, I think that was a crazy time. I wasn't at the company then, but that was a crazy time.
so that's fascinating to me, and I think people. I want to say two things. People probably listening are like, sort of like that lunar crash was terrible for so many people. So they probably don't like the sound of that guy standing up all under his desk to make 400 grand when everybody else lost. So
I don't think we'd be very well
let's
liked in the industry.
no. So let's get
so
into those dynamics later and
yeah.
all. But I kind of want to, like, I mean, Pudding, you're maybe going to ask this anyway. I kind of want to know who Bongos was, and was he always into crypto? Was he always into trading, or like has the Bongos from pre getting into this job change? Does this job change his view on life, crypto, whatever? Yeah.
Definitely, I think it's definitely changed my trading style. Whereas I used to be an investor, I'm now more of a trader for sure, especially in these times. I'm
Hmm.
not the biggest investor. I still have some, bags I'll hold long term, but most of my money is sitting in fiat and US dollars, stable coins, and I'm looking for those shorter time frame trades personally. And even a lot on my perspective of crypto, quite a bit. I used to be in it for the tech truly and really believed in it, and then working with some guys who couldn't even tell you what Ethereum does, and they've been there for years, and they just don't care. They
Wow.
just they know the ticker, they know how it moves, they know when they see something they like, they'll trade it, but what it does doesn't mean anything to them.
And are you one of those guys now?
Sometimes, man, when I see the volume is there and the ATR when the trading when the percentages are there, so you're getting 2% candles every minute. I don't care what it does. If I can get 2% move in a minute, I'm getting in and out and never looking back.
Pudding, what do you think of all this?
Well, I actually knew the bongos pre and after, so
Oh, oh,
that's interesting to me. Like, and I would say over this year, I have always been after the revolutionary sides of crypto, and I would say over partly doing this podcast, partly just in general in my life, I've become more and more doubtful of the story that crypto tells. So kind of what I'm hearing from Bongos is he's moved a little bit away from the stories and is just looking at the brute numbers. But you know what? I do want to I just to get this over with because you know, when my mind thinks of like intense trading and intense traders, I think of the Wolf of Wall Street style like movie,
hmm.
just and you say your company's big and it's got all these 300 people. I secretly, I just am like, so what is it, like Wolf of Wall Street? Are you doing blow off of hot girls boobs? Like, what's it like, what's it actually like in the thing? Do you have these epic parties? What's it like in the background?
Is this the part also, Pudding, where you say you were doing that anyway, bongos? With the bongos I knew was doing that anyway?
I mean, of course, we were
Let's get
doing
it
that
started.
before, so
Yeah.
I just hope it's continuing here.
Yeah, yeah. Have you just more hookers and keepers
Can
now?
afford more now. No, it's we definitely had. There was a side of that for sure. It was one of my first weeks there where I went to, we had a crazy just company night and it was insane. We had 20 something poker tables set up, or everyone came in who wasn't working in the office and who was, and we had a massive poker night. The boss is slamming down cash. It was all free for us to play, free booze. Um, and that was, good to see in my first few days there, to see they're actually quite legitimate. They know what they're doing, they're professional, they're set up, and they're not just like a scam firm that wants you to just trade for them and they're going to take everything and give you nothing. It was good to see that, and that was definitely a good introduction. At first I thought it was a bit more relaxed and there'd be a lot of that, but then the next few months were pretty serious. Like, they take things seriously. We definitely have some wild times. Occasionally celebrate some big wins and go out and party a bit, but for the most part, they are quite professional. But yeah, they can play up when they want to, as you get when there's that much money involved in.
Oh,
I'm sure.
boring. No
Yeah.
hookers, no
Well,
blow.
well, even if your firm doesn't, do you get the impression that there is other firms that are more like this Wolf of Wall Street thing, or is that just out for Hollywood and nothing else?
I mean, I can see it for sure. When there's that much money involved and a bunch of guys and you want to celebrate, we did have some big nights where we'd go out and celebrate a win when all of us are doing well. But I think well, that's how the Wolf of Wall Street ended. With they fucked up, they partied too much, and it all went downhill in the end. And I think these guys have been around long enough that they know the boundaries, they know the limits. Of course, there were times when the boss would be rolling in at 2 p.m. in tracksuit pants and no shoes, sometimes thongs, sometimes, and He'd had a big night and he was very hungover and had to cancel meetings and you couldn't see him. And I'm sure he played up when you get to that level, like anyone would. um, but definitely at the start, we're very serious. Uh, they don't like you playing around. Like one of the things we had to do was we had to build a schedule and a calendar for every hour of every day, 7 days a week. We had to account for what we're doing, and tell them basically what we're doing and where we'll be. I mean, we can just put personal time. We don't go into too much detail, but they ride you. There's that discipline there. They build that structure because they want you to succeed. Because your success means more money for them and more money for you, and they push you hard. Yeah, for sure.
Interesting. Yeah, go ahead, Pudding.
So the next place that I'm sort of interested in is my understanding, more or less, is your job in essence is at the downfall of the crypto noob. It in a way, what you're doing is being a skilled trader that is headhunting dipshit traders.
Yeah,
Am I correct in this understanding?
and
hundred
let
percent.
just before you answer that as well, like for the folks listening, I think this is important because this is like the crux of what they think you guys do in your kind of role. So like, people listening wondering why, like, what are we getting at having you on? Like we want to try and like really bring this home with the fact that this is predatory, like, so that's what a lot of people think out there, and certainly what I believe. So would you describe it as that? Just as a follow-up supplementary to Pudding's question?
Oh, 100%. Yeah, we
Wow.
we that's how we make a living. We take your money. It's PvP. It's a zero sum game. You
PvP meaning
What
player
does
versus
that mean?
player.
a player versus player.
Yeah, like we're versing you when you put your money into the market. We want to take that from you. We want to push the market in a certain way where you pick your position and you'll have to give it back with a small loss, and we'll take that liquidity and we'll put it in our pockets, and that's just what we try to do over and over and over.
Okay, but
Um,
hold on, because normal everyday traders listening will sort of like, I mean, tell me if I'm getting it wrong here. Everyday traders will be like, for someone to win, somebody else has to lose money. That's just like in and out of a market kind of thing. Like, but are you guys like, because of the tools, like the data, whatever you have, like you're like it's more than that. Just like if someone has to win money, somebody else somewhere is losing money. Like that's just the case anyway. Are you saying it's like way above and beyond that, and this is like manipulative, deliberate, dirty? No, maybe not dirty, but whatever. Like set up just to like with a wet towel wring out as much as possible in some way or something.
it definitely can be sometimes on the smaller cap coins, like the sub $100 million market cap coins. We could push them around quite a bit, and we know how much money we need to put in there to push it down 5-6%. And when we see someone market buy in, they might buy 10, 20, $30,000, whatever they buy. And if they bought, we want to push that down enough. And then when we see them puke that position and we see them sell, that's when we get out. We take that liquidity they provide and we get out for a profit. And that happens quite a bit on those low cap coins. It can be dangerous because when you don't know who you're playing and you don't know who you're versing, you can also get taken for when you try to push it down and then someone just fight you and they have a bigger bankroll. That's when you got to know when to get out. And I think that's where the poker aspect of why we look for people with the poker experience comes into it, because they know when to get out. They know when to call a loss and walk away. We don't hold on to positions, especially losing ones.
So just jumping into this for clarity from
Yeah.
my understanding. So it's not necessarily the guy that is like trading and playing around with trading that's spending $100 to $500 playing around with a few coins. You're sort of headhunting a slightly next level up. It's got to be more in the vein of like $15,000, $20,000 moves.
Most of the time, that's what we'd sort of look for. We're not a smaller account. We're going for anything. So, we earn a couple $100 and we're not hitting big moves. But yeah, if you're playing around, if you've made like a 5-10x and you're doing well and you think let's give day trading a shot and you decide to use leverage, you'll be surprised at how fast your losses can stack up. Just because it's a volatile market. There's 10% plus moves every day, and when you're using leverage and you get a 10% move, all it takes is 5x, 2x, and you've lost 25, 50% of your bankroll. And you're going to get scared and puke that position to save what you have left, or even worse, you hold on to it and lose it all. That happens a lot. Yeah.
So, yeah, if I can do anything here, like I suppose maybe just for the audience listening, like who are not maybe experienced traders and like kind of want to follow along to this and help bring it to life a little bit. Could we like maybe set the scene a little bit more, like just in really simple terms? So like and like there's people even in this crypto Atlantic group that we're in who are probably trading 5, 10 grand and leveraging. So this isn't putting like people who we're not familiar with. You know what I mean? It's not like 100 grand trades. It's like 10, 15. So I mean, there's people listening to us who'll be doing that. So this kind of guy, girl, whatever, sitting in their like balcony and like sort of like at the land maybe, or I don't know, wherever, like anywhere, and just walk us through what they'd be doing, like in really sort of simple layman's terms, what that means, and then how you guys in the back in your office are going, and then how you're seeing what they're doing, like and manipulating it or doing something off the back of what they're doing, just in really simple terms. Walk us through that.
Yeah, well, we've got a program that allows us to see like when someone market buys or sells. So we know when someone puts in a position. We can't see who it is, but we can get an idea. Because a lot of people like to use the same numbers and they might put in very specific amounts, and they do it constantly and over, and we're watching all the time. So we can see it, we can spot it, and then sometimes we know that person and how they generally like to trade. If they're very sensitive, if we push it down 2%, they might, that might be their stop loss, and we'll hunt those positions. We'll see when people might buy at support, and if we push this down 2 or 3% down below support, and then we get out of the position and it goes back up, we cover. We can target people's stop losses, and we do that a lot. We see that a lot, and a lot of people believe. I don't know if you guys are big on crypto Twitter and follow that. There's a thing going around about the Binance cartel and and they do it. Binance, I think, has over a couple hundred trading desks around the world, and they are trading against you, much like the FTX saga. How that's a good example of how people can't trade. They had everything going for them. They were in God mode. They could see people's stop losses. They had all that data, and they still blew up. They still lost everything.
So I say okay. So just like I'm sitting at my trading desk and I'm like, right, I want to put in 5, 10 grand with like 10x leverage, and I put it in, and I'm sort of waiting for it to go up or whatever, or expecting it to go up. You're the guys that are going, ha ha ha, so and so has
Let's
just
push it down. Yeah,
so and so's just made that trade. We can see it right there. We don't know who it is, but it's right there. And boom, there it is, right there. And then you go, time to push it down 2%. And what is the 2%? So that when you push it down to, this is what I'm trying to bring out. Then you react straight away. You do what you need to do to push it down 2%, which is exactly what they don't want to happen. But you're pushing it down 2% because that's the level they'll go, oh fuck, I'm fucking out, and then they'll sell, and you've won. Is that essentially the game in like the most layman terms as possible? The dynamics there. You know
yeah.
what I mean?
That's basically it. Like, what if they're using 5 grand or ten
Jesus.
x? That's $50,000. We push it down 2%. We're taking out, what's that, 10 grand almost from them. Is that
So
right? No.
you're just forcing them to like you're just going. We know exactly when you'll bail, sir, and you'll put that down 2% because we know you'll bail. We put it down 2%. You're out 10 grand. Thank you very much. You
Yeah,
know what
we'll,
I
we'll,
mean?
we'll, we'll take that fat from them. What they lost, that 2% loss on a 10x is 20% of their portfolio, their stack, and we'll take that. We'll see them puke that position. We'll use that liquidity to get out of our shorts and buy back in, and that will be, their 20% loss will be our gain, and that's what we go for over and over and over. We just sit and wait and we watch it. When we see it, we're like, great, okay, let's do this, and yeah.
And
That is fucking
and
insane. Pudding, what do you think?
and
Fucking
how
hell.
how yeah, and how many, like, I'm kind of just, I know we don't know the exact trader, but like how
Yeah.
many of these people
Yeah.
are just noob traders, would you say that you're headhunting versus maybe they're in a company like you doing the reverse? Like, what do you have just a general gauge of do you kind of feel you're mostly pulling from sort of noob traders that don't really know what they're doing, or are you competing with other professional traders?
You can know pretty quick. You can get a feel when you've been trading a coin. Like what I often do is I start with no leverage or even less than my portfolio size, and I'll just get a feel for the coin. I'll just trade it, for a couple of hours over and over. I'm not trying to make any money. I'm just getting a feel for how it moves, what it does, what the other people are sort of trading this at the time with me, and then once I've got a feel for it and I sort of see, repetitions, sort of what we look for, then we start slamming in big and we start making some moves and go for it. But you can get that feel just from the coin you're trading and getting to know the coin. Like I've got a document full of every coin and how they move in my experiences and what kind of traders are there. And that is one of the best things for someone like me to have, because when I go back to that coin when it's high volume, it's making some big moves, I know what to look for. I know what the market makers sort of do there. I know how it moves, and I've got that knowledge there to help me out.
You can come a little bit closer to the mic as well, dude. Yeah. So
It
so
just
so
started
you've already.
raining, so I shut that door. Maybe it'll be a little bit better.
No problem. So yeah, I think I kind of want to know Pudding's question as well. Sort of like, so you do your assessment on like the repetitions of the coins, but like so the people who are on the other side who you're essentially preying on could be different across the different coins. But let's just take a cross section of the coins. Are these like the literally it could be anyone from someone who's completely new to crypto, has 50 grand life savings, straight up to the guy who's been trading for 5 years, by all means hasn't got even 100% success rate in trading. Yeah, has a few wins there and there. But is it the full spectrum of trade? Well, that's what I'm trying to, because we have everyone listening to us here. So everyday traders, people who are new to crypto, who want to get in and trade or invest or whatever, to maybe the more experienced guys. So everyone will be listening to you going, that's me, that's not me. Oh, fuck, they're screwing me. Ah, no, that's not me, I'm fine. You know what I mean? Like, so for folks listening who might be getting pissed off at you doing this, do you have an idea of the spectrum of people it could be? You know what I
Um,
mean?
Definitely. I think a lot of the people, it comes in more of the territory of the low cap coins, the smaller ones, the people who are more gambling, the coins where you get those massive swing trades. Like it's very hard to do on Bitcoin and Ethereum. And the only times we sort of trade them and those larger cap coins is when our stack is so big that we can't trade anything else without making a big splash and being hunted ourselves. Um, so it's I think the most of it would probably come from the guy who's doesn't really know much about trading. They've maybe just pulled a 5 or 10x off, and they think, "Oh, great, I'm going to try my hand at day trading." And those people without some serious commitment and hard work and a lot of learning, which takes months if not years, they'll give it all back over time. Maybe small losses at a time, but it will all go back into the market. Go to someone who's more experienced, more dedicated. They sort of know what to look for and what they're doing. It's not an easy job that someone can just jump into and think, oh great, I'm going to try my hand. I made a 10x, a few weeks ago. I can do it again. Especially with leverage, it's not easy in this, especially this market today. In a bull market, great. I think anyone can make money by blindly longing, but in a volatile, choppy market, which we've seen for the past 2 years almost now, yeah, you're going to give it
Mm.
back trying to trade that chop. And there's people out there. The only people left really are the dedicated traders and the people who work in full time. Retail's almost gone for trading, and you notice that the conditions get harder. But yeah, we're definitely preying on the people without much experience, without much knowledge, who are just over leveraging and using too much money, and it's going to
But
be
how do you know who's who? I mean, I guess when a trade is placed, how do you know? Like, I mean, there's millions of trades placed all the time. How do you guys sitting at your desk know? Oh, that's the trade that we need to bounce 2% down because we know he'll sell when we get it down 2%. I mean, how does that work? Like, when there's so many trades, how do you have the dynamic for which one to put down? Or
it's a
yeah.
it's impossible to know. We don't know 100%, and that's why that aspect of knowing when to get out and call the quits on the trade comes in handy. Like for a lot of my trades, like as I said, I do thousands of trades a day, and I more than probably 60-70% of them I cut at either break even or a small loss, and I'm just getting out one or two ticks below my entry, so I'm not losing a lot. My main losses come from fees, market fees that I'm paying into the market. But when you get those wins, you ride them out and sort of you can notice things. You just see patterns after trading the same coin for hours nonstop. You see those patterns. You see the same people popping in, popping out, and they're either trying to scalp and they're like you're going offside a little bit and they're getting out. And you can see that, especially when a coin's not putting in the volume and someone's trading in much higher volume than that coin can handle. So they're making a half, 0.5, 1% splash in the market. That's quite an easy one to spot that and see, okay, they've just put in too much money into this. It's kind of a liquid, slow moving coin. And all right, this is the person to go after because when they make a splash, when they get out, they're going to make that 1% move in the market. And that's great. When you get a 1% move, you can get out on that liquidity and walk away and take some good money.
So you're really not, it's not a general thing. You're literally seeing that person,
Yeah.
that person's trade. I'm going against that person. It's
Yeah.
not general.
If it's one off and the market's moving slow or it's sideways, not much is going on, and then one person slams in too much money and there's no real momentum behind it. Like when you see 100 people slam in the same amount of money and everyone's market buying and getting in, something's going on. Like there's a catalyst for that trade, and you'll probably jump in and join it with them because you see that momentum and you'll try to get in.
So in that case, it's more of a group thing. You see a momentum, you're jumping on the momentum, or you see a dimwit doing something. They're making a mistake, and you're spotting the mistake, and you're attacking their mistake.
Yeah, they might slam in $20,000 into a choppy sideways liquid market, and you go, okay, well, I need to put in $30,000-$40,000 to push this down 2%. I'll do that, and then I'll push it down. Then when they get out, they puke that position. You'll use that liquidity to buy back out of your position, and you take that 1% that they've made, that dent, and you're going after that. And that's the easiest way to sort of make.
Okay, okay, slow down, because I think that's that. I mean, that those last four sentences maybe that you sped through there, or maybe the meat and bones of what we've got to so far. So we've established like the group thing. People follow momentum. You're not really preying on them. You're probably following them, right? So there's no predatory behavior as such there. But it's just one fella, like when whatever dynamics this one guy or gal jumps into a sideways market and goes from their perspective, they're like, I'm just trying to bring this to life for folks who again aren't familiar or may not be familiar with these dynamics. That person on the other end, for whatever reason, and maybe you can help bring out what they may be thinking, or like they're maybe thinking, right, Annie, I'm gonna chuck in 20 grand on this shitty sideways market, and by me chucking in 20 grand, I'm gonna be smart and go, ha ha ha, up 2%, 3% it goes, and I'll push it up 2 or 3%, and I'll get the fuck out then, and I'll get my 2 or 3%. What they don't know is that you on the other end are going, ha ha, we've been fucking following this tube. We know his patterns. Or maybe you haven't even followed him, but you're like, what the fuck's this guy doing? Thinking he's all smart bollocks. You double what he's put in. You put in 40. You batter him down 2%. He's like, oh fuck, what's happened? He shits his bed. He gets out. He loses his 20 grand. Somehow, would you explain to me, get that, like, because he sold it, so how do you get it? And then you take his money and that's your profit. Do you know what I mean? Is that the dynamic? Because it just that seems to be like the meat and bones of the predatory behavior here. Like whether he's a dumbo, whether he's just an opportunist, and this is a ton of people that do this, so it's not just one or two guys, and this is the interesting part of it. But you're always there to go, ha ha ha, fuck you, I've got more liquidity than you, 2% down, bang goes your life savings, or bang goes your mortgage that you were hoping to bring back to the wife with a double fucking in out. I'm just trying to bring it to life a bit. Like, so can you just walk us a bit slower through that last little piece there? Because I think that's it. You know what I mean?
Yeah, no, that is it exactly. So, like I said, we're watching all the buys, sells, liquidations on these perpetual contracts. So they're the futures. They're not the spot. We're not looking for people who are investing. We're looking for people who are using leverage And the worst part is this guy who's slamming in 5, 10x, whatever, he's probably going to be right eventually, because as soon as we manage to push him down, and we're waiting for him to puke, we're waiting for him and others and whoever's in the market to get out or get liquidated. And when we see that, their liquidation, their puke, their covering will push the market, their sell will push it down even further. Whatever volume they're using and the liquidity in the market, we know how much it'll go down. And that liquidity, when they sell and they push it down 0.5, 1, 2% more, that's when we cover and we'll sell our position, or we'll buy back our position if we're shorting the market. Let's say if we're pushing it down, we'll buy back on that 1% dip that they've caused by selling their position. And that extra
Okay.
percent is our profit. That's where we've gotten in, especially, we might have had to push it down 2%, but then when they push it down that extra 1% by them selling, we buy back in, and that 1% is our profit. And
So do you win both ways? Do you like they jump in, you see, ha ha ha, we've got you. Are you already in a are you in like a short position because you know, all right, we know we're gonna stick in double, we're gonna bring them down, they're gonna get out. So the market's gonna go down because we're gonna force it down. Are you in a short position so you win by bringing it down? And
yeah,
then because it's down, you buy it at the low and ride it on the way back up, and so you win your short position on the way down because you've shorted it down by putting in so much liquidity on top of them, and then when it's at the bottom, you're going, all right, we'll take that as well, and we'll buy at the bottom, and it goes back up, so you win down and up. Is that what you're saying?
we do sometimes, for sure. We call that a cut and reverse. When we get out of our position, we get out of our short, and we'll actually reverse it, jump into a long, because we'll see that
Right.
opportunity. We'll buy back lower, and then we'll buy more. We'll not even cover and get out of our position, buy back, but we'll buy extra and go in, another 2, 3x maybe, and ride it up if we see that opportunity there. Some of my biggest wins have been from those cut and reverses, when you're riding a great short down and then you go, all right, slam long, and then you ride it back up, all the way back up, and you're just going for that volatility. It's not easy to do because, it's never easy to pick a top and a bottom, but when you nail it, it feels good. And you can make some good money to just doubling up on your profits.
And there's another piece to this that I'm understanding, and
Mm.
I'd like
Yeah.
if you could clarify it a little bit. Um, the other factor is, and I know that there's some like non-disclosure realities, but in general, you could maybe describe, you have access to tools that say this other person doesn't have access to. There's some things that you're seeing that they are not aware of, in at least helping to formulate some of these decisions, because you have access to some tools that they don't have access to. Is that correct?
Definitely. I mean, a lot of the tools we do use, on my screens, I probably have about 5 or 6 different indicators up. About 3 or 4 would be publicly available to anyone who puts in the work and finds them and knows how to use them. But then we've also got a couple of in-house proprietary built tools which give us that slight edge. Like, we don't trade off a chart, like I said earlier. We use order flow, so we know how much to put in to move the market. We've got all that data in front of us, and we don't use a chart. We use certain indicators where we can see the market going up and down, but it's not a chart. We trade off the books. We watch the books, and we also have the advantage of our servers. I'm pretty sure, are set up in Tokyo, are based in Tokyo. So we've got that slight edge of like those milliseconds ahead of other people of retail, and that provides a lot of advantage in those high frequency, those low time frame trades. Um, that some people just having that couple of milliseconds, half a second to get out and get in to see that can change the game for you if you're only going to be in the
So it's a
trade for a
bit
few
of a
seconds.
double whammy. You're basically headhunting the lack of experience, and you're
Mm.
doing it with much better tools.
Oh, 100%. Yeah, they've spent big money on these tools that they've built themselves or they've customized. And we have access to that, and that's sort of why we give them a lot of the percentage of our wins, because we couldn't walk away and trade without these tools that they own, and they don't share. It's not publicly available.
Now, you may or may not want to answer this, but I want to ask it. Do you recommend new people to trade. Because I'm what I'm hearing is like I
Yeah.
probably should stay out
Stay
of this
away.
game, but
Stay away.
I'm curious to
Yeah.
just hear from you know, having the insider look, like the you that was trading before. I'm not necessarily looking for tips, but like if somebody wanted to explore that, maybe how could they do it in a way that they'd be less likely to get chewed up by your predatory business.
Stay away from leverage. If you think leverage is going to make you more money, you're wrong. Leverage is going to lose you more money. Unless you know exactly what you're doing, you're disciplined, and you've been doing it for a long time and you know how to use it because you've done it for months, years, and you've got that experience behind you, stay away because, as I said, we see you, we know what you're doing, we know you're using leverage, and we're going to try to take that from you. And
Can I? I mean, this is fascinating, and I'm glad you asked the question. Pudding it's just fascinating because I think leverage trading is available to. I mean, the temptation of it and the availability of it is just there for even newbies. So we do know newbies are doing leverage trading, and they're obviously getting stuffed. But clearly, like they're at the most risk here of being preyed upon. But my sense is that like with the tools that you have, and even like guys who might be doing this for ages, like they're getting stuffed as well. I mean, like, would you say that's fair? Like, you with your skills and your knowledge and what you guys can do, like even like people who think they know they can win the game and are still liable to get screwed over. Like, because we
yeah,
know
oh,
some of them.
100%.
They're in some of the groups that we're in, right? I'm not to name names, but they're always going, yeah, yeah, leverage, yeah, did this, did that, made a fortune, and now I'm listening to you going, those guys are probably broke, or are they, or like what?
If they're not
What's
yet,
going on?
they probably
Living
will
in
be
a tree
soon.
hut?
Yeah,
Yeah, right.
it's a dangerous game, and even for people like us, I've seen guys blow their accounts in hours because they're tilted. They go on tilt, they don't know when to stop, and they think, okay, they're trading their P&L now. They're not trading the market. They might have gone down a few $1,000s or more, whatever, and they go, okay, I need to make that back, and that's what they're focusing on, making back those losses, not trading what's in front of them. So they up their leverage and they use more, and they think that's how they're going to make it back, and after you see that, and I've done that personally when I was starting out. I've done that a few times, and it might have been like 5 a.m. and then my mentor, my trainer, would give me a message even at 5 a.m., 4 a.m. What the fuck are you doing? We're having a meeting, stop trading. They'd cut my account off, and we'd have a meeting as soon as they got into the office because they just want you to explain what you were doing, why you're upping your leverage while you're losing, and how you're just giving back so much of your gains. And you see it
Right.
happen. You see it happen even with the best traders. And I think when someone becomes one of the best traders, they know when they're on tilt. They know after a loss to either walk away, take a break, go for a walk, go for a run, just do something, not trade for half an hour, just to reset and not get into that tilted. Got to make it all back. Got to spend more. Got to trade more because that's how people come undone, especially with leverage. You see that a lot.
Yeah, and I think that's so important. The reason why I asked that question is curiosity as well, because I know some of these people that just boast about it, but so it's a bit like, are they actually doing well? But it's also because, and this is me just like this is kind of sort of a more sort of like my perspective, and I don't like this side of crypto is not for me, right? Putting maybe has told you that whatever, right? But it sounds like the leverage part you're advising against anyway because of losses, but I think what the reason why I asked that question following puddings is because so many fucking noobs will follow these YouTubers or these people in their communities who are saying, "Oh, bro, you're trading now? Yeah, you're trading. Get into leverage trading. You can 10x your gains." So if the message is out there that actually know the guys that are leverage trading are actually getting screwed as well, it might mean that the messages translate down or whatever, communicate down to the noobs that actually they're not fucking driving about in their Lambos. They're probably screwed. They could get screwed as much as anybody else. They are. They're not the biggest fish in the sea. Fuck them. So just don't do this game and don't land your family in trouble. Invest for the long term and don't play this fucking game. Do you know what I mean? So I think it's really important to find out the different levels from different perspectives because it's all fucking linked. Do you know what I mean?
Yeah, for sure, 100%. your crypto is volatile. It's volatile as fuck. Everyone knows that. You're seeing 15,
Yeah.
20, 30% moves in a day from some of these altcoins, and they're big altcoins. And if you're using 5, 10x, all it takes is a 10% move, and that's your account gone if you're putting in everything onto it.
Fucking hell.
And you've got to
Yeah.
see that. So if you don't have a plan to get out, if you're thinking too much about your profits, not about where your trade invalidation is and where you're going to get out, it might be 1-2% from your entry. You're doing it wrong because when sometimes people will watch it go down 5%, go another 5%, I'm liquidated, but I'm not going to take a 50% loss now because I'm using 10x and I've lost 5%. That's 50% of your account gone. Another 5%, all of it's gone, and they sort of believe it's going to go back up, and they're hoping it's going to go back up, and then you've got guys like myself on the other side just keep pushing it down, and when we see that person puke their position, that's when we'll get out. And we've got that, we've got the bankroll to do it. We know what to look for, and like I said, those noobs are the ones we're targeting. That's the easiest money, and that can only happen with leverage. If you're not using leverage, you can hold that thing to zero, and then all your money's gone. But it's never going to go to zero. It always comes back up eventually. And those guys, they will be right eventually. But using that leverage means eventually doesn't matter if all it takes is 5-10% and you're gone.
So no leverage. This is the if you're a noob, that's the one of the big
Stay away
takeaways
from
from
leverage.
today.
And you've got the volatilities there where you can not use leverage and still be a day trader and make those 5-10% and compound those wins 5 or 10 times. And that's your leverage there. You're taking no risk almost, a lot less risk. And you can still make those big moves. You just got to be more active and be more patient and not chase those big wins.
Cool. So we kind of brought it down to the little guy. We brought it down to the noob. I'd like to we're starting to get to the end of our cast. I just want to take a few minutes to talk a little bit about the bigger picture. And we briefly talked about this earlier. The nature of your business, it's not necessarily doing anything illegal. It's predatory by its nature to some extent, but I'm kind of looking for the underbelly of the overall system. Like, we take the FTX where, what are the cheaters, the true cheater companies? Like, what are they doing? You got one group of traders in one room and another group of trader like pulling like moves on it. Like, basically, I'm talking about the big players screwing over the big players, and the cheating mechanisms, or maybe cheating isn't the right word, but the where you really dip into illegality. What are some of the things you've heard of, seen? Yeah, I'm interested in some of this stuff.
Well, the FTX thing is probably the best example. You've got a company based overseas in the Bahamas, I believe it was, and there's no regulatory oversight of crypto. So not only these guys, they had Alameda, their sister company, trading, investing in these projects, who would get given for their pre-sale early investments, they would get large percentages of these coin supply. So not only would they hold 5-10% of the coins, which is massive, they are also trading against people. So they know when they're going to sell. They know when they're selling those spot coin, like their positions, and that's going to dump the market. Selling 2% of a coin sends the market right down of the total supply, and they can trade with that. That's one advantage they have, which in my opinion is definitely cheating. It's kind of insider trading, but they swear they had no communications to each other, which is just bullshit in my opinion, because they didn't have many employees and they're sharing an office, so it was going on. Not only did they have that, they had Alameda trading against FTX users, and they had the knowledge of when they're going to sell their coins, but they also had access to all the FTX users' data. They knew where people's stop loss was. They knew people's account sizes. They had that extra edge that we don't have by actually knowing the personal traders, and they could hunt people's stop losses. You might put your stop loss 5% below your position, not using much leverage, so you might only take a 2.5, 5% loss, whatever, and they know where they have to push the coin down. They have algorithms, they have the maths to know exactly how much they're going to make and if it's worth their time. And I believe they were doing that, and I don't know how they still blew up.
That was my question. And they still fucked
still
the duck.
They had God mode on, but I also read they were spending $100,000 or $80,000 every week on a chef, and they're buying properties around the Bahamas. He called himself an effective altruist, which is just bullshit. I think he admitted to it. Like some text messages got leaked where it was all a scam. he was just greedy. He was young. He didn't know what was going on, and their whole staff was probably under the age of 30, with not much experience. They were quite fresh, and they didn't have that prior. They did it in a bull run. They became big in a bull market, 2020 to 2022, and then as soon as the bear market hit, November last year, when it was in peak after 6 9 months of the bear market, they blew up because they were over leveraging themselves and they weren't managing their risk. They didn't have a CFO. They were trading billions of their user. They were trading their user funds, and they were
Crazy.
paying advertising. They were paying big names to celebrities to go on the Super Bowl ad. Whereas Binance, on the other hand, they don't really advertise much at all. They're quite more disciplined, and they have that staff. They're not as transparent. They're not. No one's really transparent in the crypto industry, but you can see the discipline and the differences in the structure of the company, which is why I think Binance is still here and FTX blew up in a disastrous
And there's
fashion.
no chance Binance is like looking at people's buy
Oh,
orders.
100% they are.
You think they are? Yeah, you're
Oh
like, no, I'm
yeah,
not saying that.
They're not doing it. They're not sharing an office. They're not doing it so blatantly connected. But I think the DOJ is coming after Binance for having hundreds of trading desks around the world, private companies, different companies, but they still invested or they're sharing bank accounts. They're doing something, and they have also God mode on, and whether or not they're sharing that data. I mean, I would assume they are. No one can prove it, and there's no regulatory framework to really go against them. The US would go against them, but that's why they have Binance US, and they probably don't do it on that side of the company. But the Binance broader company, where all the volume is and all the action happens, at I don't know where they're based, Binance actually, but I imagine it's offshore and
Isn't it Palau?
could be. They're definitely invested in that. Yeah.
Probably
They,
own Palau.
yeah, they're definitely the way he's
I don't
invested
know
in.
if you have any other questions because we could just dip into that ID thing. That's a little bit interesting to me. Like, so there's some sort of like a trader citizens ID that comes out of this country, Palau. Can you talk to us a little bit about this?
Yeah, so Palau is a small group of islands in Micronesia. You would never have probably heard of it before. But for $250 US a year, you can become a digital resident and a citizen almost. And that allows you, one of the biggest perks from that is you can trade, if you're based in the US or Australia, Canada, whatever, you can then trade with your digital ID on Binance futures and on a lot of other exchanges futures with your identity, because being an Australian citizen, a US citizen, you don't have your country will restrict you from trading futures on Binance because either don't like what Binance are doing, or they had different vested interests. It was funny watching how easily the US went on FTX and how well they treated FTX, being a US based company or having a US based founder, compared to how restrict they are on a Chinese owned company such as Binance. But Palau is a great workaround if you really need to use leverage.
And how many people do you think are actually using this workaround? How many new citizens of Palau?
Personally, I know over a
And,
dozen.
and why is this a bad thing? Are we saying this is a good thing or a bad thing also?
I
Yeah.
mean, it does give you access to leverage and exchanges which are otherwise cut off from your country, possibly. A lot of big countries are. They do cut your restrictions to Binance and other exchanges. So it's a good thing that it gives you that freedom to choose what you want to do, and that libertarian,
Mm.
it's your choice. You want to do what you want to do. This gives you
Yeah.
that choice, which is great. But it can also put people who might have been cut off from leverage for probably the good reasons away back into trading their favorite exchange.
Yeah, I think we can say, I think this conversation is trying to say like there's risks and you probably shouldn't get into leverage trading for all the reasons why we've discussed, not because your government tells you you can or not. You know what I mean? We should all be adult enough to go down that route.
Yeah, exactly, and that's one of the great things it does. It gives you that freedom back to not have to listen to your government, who might push you into own the exchanges
Yeah.
based in your country, where the fees are 5, 10 times higher than
Yeah.
Binance's, and the
Yeah.
volume's not
Yeah.
there. Who are probably doing the same predatory shit, and it gives you that choice, that freedom to go back to one of the best exchanges in terms of fees, volume, liquidity. Yeah, it gives you that free right to choose that yourself, and if that's what you want to do, that's what you can do, and it gives you that
Yeah.
freedom. Yeah.
Yeah, well, I don't. Yeah, but I mean, I don't know what you would say, Pudding. You have your own opinion, but I don't think anybody should be trading their stuff on leverage. So, but I just don't think we need the fucking government to tell us that, and you have to go to We shouldn't need to go to Palau to decide that. You should just say that's a stupid idea. That's not fucking leverage trade, and that's not like even. How do you want to go? Where do you want to go next with this pudding? Like, I mean, should we like take it up even a further level and sort of ask um, um, all of us, I guess, like what is our stances on trading versus investing versus how does this fit into with the whole crypto ecosystem and like what happened to our dreams versus just making money? What's the
Well, well,
what's
well
the balance? What's the trade-off? Should we even have to make that trade-off? You know,
I would
what
go so far as to like just jump in with that question and just point
yeah.
blank say, is your job and this company that you worked for, is it positive for the crypto community?
Yeah.
Probably it's hard to answer. I mean, with any, like I said, they've been around for 20 years. They've only been in crypto for 5 years. It happens in any traditional finance market. There are companies like mine. These guys are just probably one of the first to move into crypto and do the same stuff that they've been doing for 20 years. In terms of the effect it has on the crypto community and like the crypto markets themselves, long term, I don't you think you'd see much effect. You're always going to balance out and go back to where they're going to go anyway, regardless. We're not investors, like I said. We're not shorting coins or buying coins for days, weeks, months on end and really manipulate that market in that longer time frame. But we are definitely contributing to that high volatility. So which is why it goes back to my don't use leverage point, because we're going to push the market the price around 10%, and eventually your buy would have been right. You probably would have made 30%, 10%, whatever you're going for, because it'll get there eventually if you buy at the right time and know slightly what you're doing. But you got to expect to see those losses with this highly volatile industry, which we are contributing to and we are causing quite a bit, along with a lot of other people. Um, but we are having that definite effect on it for sure.
And how do you sleep at night?
Like a baby.
In a bed of
Like a
roses and chocolate.
bongo. He's not bongos. Isn't affected by bongos. He's got his earplugs in, sleeping well.
Let me ask you a couple of
Silk
questions. Like,
sheets.
what do you think's more sustainable? Like, if you were advising a noob, like, would you say, look, just invest for the next 20 years and you'll get a better return? Never mind all these like sort of like idealistic questions around crypto. Just if they want to like get in on a new financial system, skip the old one because it's fucked. So that's good enough. Would you say just like you're more likely to set up your family, your business, your community by investing in Bitcoin or Ethereum and just letting it hodl for 20 years? Or would you, in the position that you're in, say, don't leverage, forget about leverage. So that's not part of the question. Just invest for 20 years or B, trade. What would you say for the noob? It just wants to set up their family or their community or whatever, their future. What's your advice?
Yeah, well, it comes down to how much time they want to spend on the market. If you just want to invest and forget, go back to your day job, you're probably you're going to outperform 95% of traders, I think the stat is, over time, because a lot of people,
Mm.
regardless if they win, they're going to give it back if they're actively day trading. Um, but if you do want to be a day trader and you want to dedicate, that's your job, and you want to put that time into it, even as a hobby in a few hours a day compared to your 8 hour day every 5 days a week. Do your research, practice, use a paper account for weeks, play around with monopoly money on a real market and see if you can be profitable. The experience will change using real money in a real market, but at least you have an idea. You might go into that and lose it all in a week and go, okay, shit, this isn't for me. Or I've got to practice this for another few weeks, months, whatever. And
Who
then
the fuck's doing that though? That's like I mean, putting are you do you have 8 hours a day where you're like writing your trades down on paper? I mean, I get up at 11, probably shower and fart for the next hour, have breakfast, like
It became
you miss it.
very clear to me that I wasn't a trader very quick. I mean, I got my
Exactly.
like the bongos of the past lopped my head off like in 2017 real quick, and I was like, all right, I
Yep.
ain't a trader.
just know what you're
Yeah.
doing, learn what you're doing, and like Pudding said, if you know it's not for you, stop. Don't keep going if you're losing.
Okay, I have a couple more small points just because I'm thinking of clippable moments, and it goes back to the wolf. I don't know if you have any more questions, Pudding, but I want to jump in with this because ever since you mentioned Wolf of Wall Street, it's been in the back of my mind. Do you guys in the office, like, you just let's just, in the circumstance that you've screwed, you've preyed on someone and you've been made a killing. You made a killing, right? A killing. Do you guys have some sort of ritual where you're like, yeah, boom, fist pumping, or like, I don't know, like, is there some sort of Wolf of Wall Street activity, like, wherein even when you make a big killing on a trade and screw over someone or whatever, you do something, like, I don't know, like,
Oh man, especially, yeah, for sure. Especially if we're all in the same trade together and we all win together. That way we can really pull our money together and push it even further and go after bigger volume. Um, yeah, there's a lot of that going on, a lot of celebrating, a lot of screaming. On the other side of that, we have a lot of smashed keyboards, broken screens. I've seen a guy pick up his PC and throw it at a wall and completely tear it apart. It goes both ways.
Right. Well,
wow,
actually,
awesome.
let's just dip into that because I kind of actually forgot. Like, what it's more or less. It seems like we've talked a lot of the kind of the good stuff, a little bit of the high stress stuff, but you know, you saw some darker sides of things too. You saw some people really fall apart. You were telling me a little bit about that. Maybe you could just quickly dip into the toes into that space of the other side of when things aren't going right and you're
Yes.
working for a company like this.
Yeah, so I was
And,
telling
and, why, and why that's important, yeah.
Well, I was telling Puddin earlier when we were setting up that there was actually a guy who I don't know the details around how much he lost or what happened or what else was going on in his life, but he jumped from the 21st floor of our office and
Whoa.
committed suicide, which is not uncommon in this space, I think, and in all financial and gambling and all those areas
Yeah.
of life. You see people betting too much, risking too much, and they lose it all, and then that's where they go.
And then they're
Um,
just like, maybe I can fly.
yeah. So they try it out, and yeah, it doesn't go too well.
Well,
And
isn't that why they have no hotel balconies in Vegas, because that's they want to avert that risk.
that's it. And a lot of casinos, I know from personal experience. Well, I've never been there, but I've worked in some casinos in the past, and they have morgues underneath them. They have cool rooms because it's not uncommon to get a few people every day in bigger casinos taking their own lives. And it happens in the trading world.
Wow.
Well,
Pudding,
we
what is,
found the dark.
profound the thought. I mean, well, I mean, no, we're laughing a little bit here, but like, I mean, it is in these high stress jobs where what did you say at the start? The statistic, I can't remember, like, of 60% of the people, three are left or something like that. So,
Of
you
60
know,
people, three are left.
60 people,
So what's
60
that?
people, three are left.
95%? Yeah.
Man,
Didn't
so
make
there's
it.
95% of people don't, and they're maybe coming in with their dreams and of making it big, and then they're out. They've lost their job. Like, so it's not just people on the bottom ladder of life who are like, who can have their lives turned upside down. You can be in a job and be out of it
And so, what do
seemingly,
you
and
think was the difference? Why were you one of the three?
I didn't live in the city I worked. I wasn't from there. I moved there, which I think helped me. I didn't have those distractions around. I had enough money to be able to not think about money and worry, stress about, if I don't make it next week, I'm out of money and it's going to be over for me. So I had that ease of mind, which a lot of guys I saw didn't have that, and they panicked and it freaked them out. It threw them off their game, and it's quite common. And like I said, I slept under my desk for the first 10 weeks. I lived in the office.
wow, really?
Yeah, I wasn't planning on it, but then my boss or mentor was just like, just sleep here, just live here. And I was like, okay. I
Wow.
did it, and I did it for about 10 weeks. And after that, I was a bit over it. I'd be woken up at 2 a.m. from the squawk telling me so and so coins making a 5% move in the past minute. And I'd wake up and start trading and was living there. I was living and breathing it, putting in everything I had. So I was determined to make it. Um,
Right, well,
which,
you did if you're one of the three that did.
yeah. And it's, you've got to they told us that from the beginning. It's like, this is not an easy job. It's not glamorous. You might have seen The Wolf of Wall Street and you think it's going to be parties and money nonstop. And
Mm.
they were right. It's not. Your expectations are shattered quite quickly. after 10 weeks of sleeping in the office and barely breaking even, you're just like pulling your hair out and wondering when it's going to happen for you. And, the guys who've been there for a long time and been through it, they tell you, just keep doing what you're doing. You're putting in the work. It'll click eventually and you'll figure it out. And they're right. But you've really got to put in the work and be able to manage your stress and that emotion. That's a key to it. A lot of the guys who lost it couldn't manage the emotion of going nowhere for so long and having, like they had families, they had people to provide for, and they were bleeding their money with making nothing, and it seemed hopeless, and they'd give up. Or yeah, after a while, they'd been told, after 6-9 months of not going anywhere, they kind of give you an ultimatum. You got 2 weeks to really do something, and then you're out.
Yeah, I don't feel like we jumped into that enough, and maybe we shouldn't have because, like, we're trying to get into the bigger dynamics here. But like, it feels like touched on a pudding earlier, but we could have delved into it a bit more in terms of like, you don't get paid at all until you get over a certain threshold, 100 grand. Did you say? So people are working endlessly with no pay, like not even a basic salary. Like not
Yeah.
that that would make them happy, I'm assuming,
It's
but
pretty
at least it's
ruthless.
something.
Oh, it's
Yeah,
it's predatory itself. Like, there's a reason why these guys are making so much money is because they've essentially
that's
got free
crazy.
labor
Yeah, I
until.
mean, and basically, there's probably the other 97, probably 50 of them were still made money. They just didn't make enough, so the
Enough.
company
Yeah.
still made out,
Mm.
Yeah,
right?
they might have walked away with an account from on $10,000 or $20,000, which they might have made $5,000 or $10,000 of that in profit. And the company is nice enough. When you leave, they'll take back all the money they've invested in you, and what's left, they'll give you 50% off. So you might walk away after 6 months of work with $2,000 or $3,000, which
Oh,
definitely,
great. Oh,
yeah,
wow.
exactly.
That's
After
big of them.
6-7 days a week,
That's
10
big of
12
them,
hours.
yeah. Thank you very much. Yeah.
Yeah.
So let me ask one final, maybe overall question that I've been wanting. Like, I mean, like, I'm just gonna make it clear, like, because I've an obligation to people listening. You get like, who are probably like wondering what I think. Like, like if it's even in this like crypto or like the fiat system, like ever since 2008, and I've been kind of operating in this world, like with my old job, like I do not see any sort of, and I'm like, I guess this is what made me sort of an anti-capitalist in a lot of ways. Like I like this Wall Street's excesses. I do not see the productive value in society of guys who sit behind a desk and it's about sort of moving numbers, with the whole derivatives at a weight. What was the productive value in society it was really creating? I'm more of a real economy kind of guy. So my question here is, we've just now spoke about the guys who are like stressed, jumping off, sort of buildings. They're so stressed, not getting paid. That's one aspect. Earlier, we've discussed about like how newbies and even somewhat experienced traders are likely to lose unless they get dedicate so much time to this. We then pondered sort of, what is the real benefits of trading versus investing in terms of the return on investment you're likely to get for your family and community. We didn't touch on really like what it is for the overall crypto ecosystem, but folks listening will make up their own minds in terms of, when it gets so predatory and it's so volatile, is that really good for a new economic system that's kind of trying to stabilize and win against the current shitty one that we have? So I'm left to ask both of you or whoever wants to answer, like, you know, what value or like what good do you see out of, sort of anything that we've discussed here, this trading, this prop trading, like what, like if I can leave, maybe just put it to you guys, like what do you guys see as the good that's coming out of this kind of work? Like these kind of, who's it good for?
Yeah, well, not a whole lot of positivity, I
Mm.
believe. Yeah, it's good for us. It's good for the guy winning, financially, but
But
it's
even that seems few and far between. It seems even the bosses, maybe even in the firm, are the only ones, and then maybe three of you that are left.
yeah,
Yeah.
it's not as glamorous as people think. It's life of a prop trader and any sort of trader. It's stress. It's a lot of hard work, a lot of long hours. It's not easy. Sure, the potential massive returns is there and making a lot of money, but you can just as easily lose it and go the wrong way. just as easily if you don't really know what you're doing and you're not prepared to put in the hard work. And in terms of the whole ecosystem and society and everything, there is no value in this sort of trading in terms of benefit for it. It just comes with the territory. Much harder to do, almost impossible to do on chain, which is why things change drastically when you move away from a decentralized exchange or move away from a centralized exchange and go to a decentralized exchange. You can't get that sort of the same sort of returns there, which is why, if you want to invest, do it on chain. Don't do it with a centralized firm. Don't use leverage because, these firms that have been around for decades, probably longer, over a century almost, early 20th century, people doing this. And it's the same sort of predatory behavior where, they're just trying to take your money. They're not adding any value to society and they just see an opportunity. And if we didn't do it, someone else would.
And this is, I think, dips into an area that we have discussed before in the podcast, which is what's the difference. So we're crypto and we've got revolutionary ideas and we want to make like real change and regenerating like doing things better and having a better society. But I what I would say is that it's becoming more and more apparent that aspects of the mainstream capitalism and what's going on in markets, all of that stuff is just transferring over, and you can just see that all that stuff is moving over into the crypto. That it's maybe there from the beginning, maybe it was always planned from the get-go. I don't know if there is a world where that doesn't exist. So what we could say is, let's look at it with open eyes and honest, realistic eyes. So just don't get sucked in by the frou-frou side of it. If you care about the revolutionary aspects of Bitcoin, crypto, being decentralized, yes, do those things, develop in those directions, fight for those places, but just know it will not stop businesses, honestly, like the business you work for, or like there's dozens of other. The money reality corrupts. Money corrupts, and if we're in a crypto, at the end of the day, is financial institution in general, and people will be corrupted and the predatory realities are there, and we all need to be aware of them at all times so that we are not one of the suckers.
No, that's it completely. And you're going to see that no matter what, on chain, off chain, wherever you go, there's always someone who sees an opportunity to make money. I mean, that's why scams are so prevalent in the industry, because people see that easy money, and they're going to take it, because if they don't, someone else will. You can never build an honest, open, transparent system where everyone's honest. Honest is the key word there. When there's that much money involved.
Yeah, I'm left provoked that I don't know how to respond to both of what you just said. I guess we have to face everything in reality until we decouple from the current fiat system. When that's going to happen, everyone's got an opinion on. But I guess until we do that, who knows? But I'm just imagining a world where the people who really believe in, even say, Bitcoin as an alternative financial system, if we get to the stage where it's replaced the dollar, and yet you have 4 or 5 trading firms who still trade Bitcoin in this new system, and it's so volatile because of the trading they do, is there anything we can do to shut those guys down? Because it would be not good for the economic system to have that much volatility at that stage. I think most Bitcoiners would probably want stability and not volatility. But anyway, maybe a question for a different day. I have no idea how to answer it, but it's been a real pleasure to hear this. Has been fascinating. Like there's so many lessons to draw out of it. Pudding, what do you think? Like it's just for everyone.
Yeah, I appreciate Bongos coming in here and being honest with us and giving us an eyeball into behind the curtain of that most of us aren't
Yeah.
quite fully aware of. So that yeah, as we move into whatever choice we're making, whether the fiat system fails and we move into this next system, like we're doing it with open eyes, we're doing it with awareness, we're knowing that bad actors exist no matter what. There probably is not, there is no panacea, there is no magic place where everybody does what's right because it's just the right thing. It just doesn't exist. We need to maybe build mechanisms where we need less trust, where less wealth can be gained from these negative places or purely financial places. But how those systems get built, they're going to be built by somebody more smart than me.
No,
Well, yeah, well said.
it's a
Well,
good
thanks,
point.
man. Thanks. It's been good conversation. Appreciate it.
No, thanks for having me. It's been a pleasure. Happy to talk and share as much information as I can, and hopefully people listening will stay away from leverage and be a bit more responsible.
Yeah, come back next time and tell us more coke and hooker stories, so we can so we can clip those up and then don't trade coke and hooker. No, I don't know if that would even work. Anyway, Pudding, you want to wrap it up there? Thanks for
Nice.
coming along, man.
Yeah, well, thanks everybody for tuning in. Hopefully, you pulled some piece of knowledge out of today's episode. And a big thanks to Bongos for joining us. We definitely want to have you back for another show.
Yeah, awesome. Thanks, guys, and yeah, we'll see you on the next one.
No worries. Thank you, guys.
Thanks.
Adios.